Hi guys, it's Doc's Market Minute for Tuesday, August 25th. Now I'm recording this at about 6:30 in the morning Eastern Time. And yesterday we went into the 5 things that I felt that we have been watching for the past few months that really telegraphed that we were going to see this big move that we got. So if you haven't watched that video yet, I would recommend that you go back and watch that, because this is so important that we understand the signature behind these types of moves, because they are probably the most shocking move that we will ever see in the market. We don't see them that often. We haven't seen a move like this in over 4 years now, and people just get out of practice with them. So they get surprised by these moves, but if you know the signature, if you sort of know what's happening underneath the hood, then you're not surprised by these moves, and in fact you can profit from them. Okay, so that's great. Now we've got this move. We've dropped over 250 points in the S&Ps, and yesterday alone we dropped almost 1,100 points in the Dow. So now the question is, what next? What's going to happen next? Well, there's 3 possibilities that we're going to see going forward from this move, and so let's detail them now. Now, when we have a move like this, we start off with the initial swing down. This is what I call the shot over the bow, because it literally comes out of nowhere and it surprises the greatest number of people. I mean, if you think about it, just a week ago, we were sitting here talking about this narrowing triangle here, and I said, look, this thing is going to move, and it's going to move in a big way, and I'm not going to have any bias towards this. We'll know which way it's going to break based on which way it breaks the triangle. So either it's going to go to the upside, but again, the odds were low because we tried to probe above that 2135 level 3 times and it failed. And so it's not surprising at all that it finally, just like a pressure valve, just escaped to the downside. Okay, so now that we have this move down, when is it going to end? Well, typically we end these things when we have capitulation, when everybody just throws in the towel and says, I quit, I can't stand this anymore, it's too much to bear, and so I'll sell out my position. And these always occur on a huge volume day. Now, is this enough? I mean, I didn't like the way that this closed yesterday. So on Monday, if this was a great candle, great reversal, we would have closed near the highs, and this would have been a huge hammer candlestick. But the one thing that gives me some hope that the initial wave is over is not necessarily that the futures are up, what are they, up 72 points this morning so far at 6:30 in the morning. That doesn't make any difference, though. And actually that is not what I want to see. And I'll get to that in a minute. But what I do like is that we've just about closed every gap here. Now, we were within a couple of points of closing the gap from October 2014. Each of these blue boxes represents a gap. This is where we just look at the S&P during the cash market day, and anything that trades outside of that creates a gap. Now, we've had gaps up here when this initial move first started. We have a very small one right there. We have a huge one that started with Sunday night, Monday morning. And so I feel strongly that what the market is going to do, in a sea of sand, any flag that sticks up like this is going to become a target. And we've already closed this gap. This one is already done. So like I said, this one is close enough that I can say that we've closed that gap. Okay, so we've kind of taken care of all the targets over the last year. So the one that comes to mind here is this one here, and perhaps even this one. I mean, what would it do to come all the way back up here and close that gap? What do you think everybody would think at that point? Well, that kind of goes into the psychology of what might happen next. So number one, the question is, when is this swing over? And we'll know when we start to see a daily movement back up in this direction. We'll know that this initial swing is over. And I want to see it close. I want to see it close well above this close from yesterday. So that's yesterday's close there. I want to see it close well above that to show that we at least have a daily swing coming back up. Now, that doesn't mean that we can't retest that bottom. And that may happen, and that goes into one of the scenarios. Okay, so let me get into the actual scenarios now. Scenario number one that might see is an actual V-bottom. We've been seeing these V-bottoms for the past I'd say 2.5 years now, since the beginning of 2013. And it's a very unusual thing, and we don't normally see these V-bottoms in the market without retesting the bottom. So this was a very unusual thing that we started to see in 2013, and it continued all the way until around this late 2014 timeframe. So I attribute this to quantitative easing. We have not seen any kind of like V-bottom-like activity since that point, because essentially in 2015 we've just been going flat. The market has been unable to get really any kind of separation and distance anywhere. So potential movement number one is that we V-bottom straight back up here and we tangle again with the 2100 area, and then who knows what happens from there. But from a fib perspective, the way that we can identify that this is happening, if we go to fib retracements, is to lay down the fibs for this, and we're going to start from about 2100. This is about where that swing began. Bring it down to the bottom here. Again, this is the S&P futures during the day. All right, so what we're going to find is that essentially if we get a bounce above the 2000 level, which is at 61.8% fib, so if we bounce all the way back up here and get above the 2000 level, then chances have increased. There's no guarantees, but chances have increased that we're going to go all the way back up and fill in the triangle at 2100. So that's scenario number one. I think it's the least likely scenario that we're going to encounter. However, there is the possibility that we will see it because we've seen this movie before. All right? So scenario number one, V-bottom. And we'll know it because we're going to have huge green candles. If that happens, we'll have these huge green candles. Similar to this, we'll have gaps that don't get filled, leaving a lot of garbage behind. And actually, I'd like for that not to happen because these gaps eventually do get filled at some point. So, for example, let's look at where the futures are this morning, and we can see right now, if the cash market opens around here, we'll have a huge gap that gets opened down in this area, and that's going to invite another retest of those lows, which is going to violate the V-bottom pattern. Okay, so this leads to pattern number two. Pattern number two is what I believe we're going to see, and I'll show some examples of this. We've seen this type of pattern several times before in these types of moves. What we get is an initial move up, and it actually goes fairly strongly as well too. We'll go to some fib level, whether it's a 38.2 or 50%, or maybe even as high as a 61.8. And then what we'll see is either a retest of the bottom or some type of very volatile range that occurs in this area, where we get multiple tests of the tops and the bottoms. And then many times what we'll also see is an undercut of the initial breakdown level. So this initial thrust down, we get an undercut of that level before we see a strong rally from there. Now that strong rally from there can lead to one of two things. It can either break out higher, or as we'll see, it'll lead to scenario number three. So let me pull back on the fractal charts on a weekly basis and show you a couple of examples where we've had scenario number two occurring. Okay, here's the regular old cash SPX, and what I'm going to do is I'm going to kind of pull out this weekly chart here because this tends to show this the best. All right, so what I want to show from a weekly chart perspective is that we've already seen this movie before, and this is almost a carbon copy of the same move that we had here. We had a very flat market here in the summer of 2011. Actually, a beautiful head and shoulders pattern as well too, which released about 250 points to the downside. And then you can see this very volatile, huge range of price action here. Just a huge range, and it featured an undercut. This is exactly what I was looking for, because that undercut tends to bring out the late bears, you know, the weekend bears too late. You know, they see the price cutting under 1100 and they jump on board, and that provides the rocket fuel. All of these shorts covering provides the rocket fuel for this thing to actually rally higher. So from here we transitioned into, this is a very difficult transition, but we transitioned into a very strong uptrend from here. So that's scenario number two. And again, we've seen this sort of thing before. You know, we've seen this. Here's a flash crash, and we went into a very volatile period with an undercut here, and then we rallied up from there. So scenario number 2 is that we stay in this very volatile range and probably below a 61% fib retracement of the initial range, right? So we don't V-bottom, but we go crazy in this range for a while. Very, very large volatility. And if you think about it, this makes a lot of sense because we've got another Fed meeting coming up in less than a month where the potential for interest rate hikes is going to be there, although I don't think it's going to happen. And we've got probably a lot more news to come from China before this is all over. So I think the market's going to be very, very volatile in the short term, probably the next 2 months, and this sort of fits in with this pattern. Now, notice how this eventually resolves to the upside. Okay? That's scenario number 2. Now, scenario number 3 is if we take the same pattern and let's bring it back to early 2008. We had the same kind of pattern. We had an initial strong move down into January, and then we had the same type of huge volatility here. And then what happened in March, we had the Bear Stearns thing happen in March. Notice the undercut, the same exact pattern, right? And then we resolved to the upside. Okay, so that's part of it. But what you'll notice here is that this creates a major lower high, especially on the monthly chart. And when we print that lower high in the monthly chart, it's all over. And this leads into scenario number 3, where we actually tip into a major bear market. So in conclusion, when we have these initial thrusts down, like what we've seen, right? So let's go back to today's price action and take a look at this again. When we have these initial thrusts down like this, okay, this is what I call the shot over the bow. This is what kicks things off. And it kicked off with that broadening pattern as we talked about yesterday. So what happens from here is very, very important. Either we see, again, scenario number 1 is a V-bottom. We go straight up and we make all the analysts happy by going into a 2200 print by the end of the year. Is that likely to happen? I don't think so. Could it happen? Absolutely. And we'll know whether that's happening based on its ability to first get above the 2000 price point on the S&P and then finally break above 2100, which has been its nemesis for the past several months, right? So that's scenario number 1. Scenario number 2 is that we see some type of bounce back up here, but it stays in a very volatile range for a number of months, probably undercutting the initial lows that we saw yesterday before rallying up and then perhaps by the end of the year breaking into new highs. So that's scenario number 2, and then scenario number 3 is where we actually get into the formation of a bear market where we rally and stay volatile, just like scenario number 2, but actually we tip over again and we head into new lows. So those are the 3 scenarios that I see happening. We're going to know probably in the next month or so as to which scenario is most likely. Scenario number 2 and number 3 are going to be indistinguishable from each other until we finally see resolution either to the upside or the downside. But I'll be walking you guys through what I'm going to be looking for all the way through this as we get into the end of the year. That's it for today's Market Minute. I hope that helps, and we'll talk to you again tomorrow.